You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to and watching the Financial Survival Network. I'm Kerry Lutz. Well, you wouldn't think that a career in acting could pave the way for a super successful career in real estate investing, and you would be wrong, because Matt Picheny is with us now, a Tony Award-winning actor. And hey, you know, Shakespeare said, hey, all life is a stage, and we're all actors on the stage, to poorly paraphrase that quote. Matt, what's better, winning a Tony or real estate investing?
I mean, winning a Tony is definitely a special event. Real estate is something that I do every day, and something that I love, that I eat and I breathe, and you know, it's what I do. But I enjoy going to the theater, you know, and getting involved in theater. My wife's full-time job is in the theater. Excuse me. Mm-hmm. And sometimes we will join forces together, and I've produced a couple of Broadway shows, and a couple of them have won Tony Awards, which is really exciting. I always wanted to win one as an actor. I used to be an actor. I never won one as an actor, but winning one as a producer is a pretty cool thing.
Hey, in a way, it's harder to be the producer than it is to be the actor, because you're responsible for all the business aspects, raising the capital, all of these things. It's a lot like ballet, being a Broadway producer.
I would agree.
So how did this skill set uniquely set you up for becoming a real estate investor?
You know, I think if you look at my whole life, there's been a number of events and skills that I've acquired along my journey to becoming a full-time real estate investor. I started off moving to New York City to go to a musical theater conservatory. I graduated from there, and I was a professional actor for 5 years. I then segued into doing some work in digital marketing, and actually I had a whole career doing digital marketing work for 18 years. During the last 10 years of that, I did real estate as a hobby. And then 7 years ago, I started doing real estate full time. So through that whole journey, I've learned many different things and many different skill sets that have all sort of conglomerated together to allow me to be, I think, somewhat successful in the real estate business.
That's a very cool story there. And so what skill was most transferable from being a Broadway producer to being a successful real estate investor?
I think the most apparent thing that has come up again and again in my life and has allowed me to succeed, whether it was as an actor or in digital marketing or now in real estate, has been persistence. Being able to, be persistent, especially as an actor in those early days. You go out on audition after audition after audition, and you don't get the part, right? For a number of factors, which a lot of them are out of your control. It really doesn't matter how good your performance is. There's a lot of other factors that are involved, and being able to maybe not get the gig, but still persist, still be there, and still keep pushing through, I think has been the key to my success in throughout my life.
All right. Well, persistence, right? Persistence is always going to prevail in the long run, even though it might not feel like it in the short run. It reminds me of Winston Churchill's famous speech given to Oxford University. It was 10 words, and it has been embedded upon my mind since I read it. Never give up, never give up, never ever give up. And if there's a model of persistence and accomplishment in the human race, Winston Churchill, putting aside all the social nonsense now really is the epitome of that, isn't he?
Yeah. Yeah. I wish I would have known that quote. I wrote a book, and in the book, I share these different keystone concepts that I've learned along the way, one of them being persistence. And I wish I would have had that as a great quote. I would have put it in for that.
You can credit me with telling you that. Just make sure you give credit to the great man himself.
I will. Kerry Lutz.
Look, in any endeavor, there's going to be obstacles. It's a roller coaster. Success is not a merry-go-round. Success is a roller coaster, right?
Yeah.
So talking to a millennial now or a Gen Zer, if you can, because I don't know if that's possible anymore, but let's just assume you can talk to them and they will actually listen to you. What do you tell them?
I'm a Gen Xer talking to a millennial. What would I give them as like a one piece of advice?
Yeah.
I think all businesses, I think everything in life is really all about relationships. And so I would talk to people about maybe developing and cultivating relationships. I think that's been the key to my success. Beyond persistence, which is super important, developing relationships with people is important. And nowadays, things are getting more and more digital. And so, how do you sort of bridge that divide of, everybody's standing there with a screen in front of, and hey, I've got my phone too. I'm not against them. I love technology, but how do you make sure that technology doesn't hinder you from building relationships? And how can you actually use that technology like we are right now, like on Zoom, has been great in terms of helping to develop relationships with people, especially people who, regardless of a pandemic or anything, people who are in different locations. I mean, Kerry, you and I are talking right now. We're on a Zoom call. You're down in Florida. I'm in New York. And I think they say, like 70% of communication is nonverbal. So if you're on the phone, you're only getting half of the message or a portion of the message, right? When we're talking on Zoom, this is a way to harness technology to foster relationships. So I think it's important for people to continue to do that.
Well, 70% of communication is nonverbal, except with me and my ex. Then it was 100% nonverbal. Hey, so, but most people, you say, you could actually own an interest in a multifamily housing development, even though you don't have any money, right?
Don't just survive, thrive. The Financial Survival Network.
Osino Resources is a Ross Beatty-backed gold exploration company in mining-friendly Namibia. Osino's district-scale land package is situated near 2 producing gold mines, one of which Osino's management team previously developed and sold to B2 Gold. Osino's founders and management are experienced mining professionals who have already successfully developed and sold 2 companies in the past 7 years. Osino has an excellent shareholder base, with Ross Beatty owning 20%, insiders 5%, and Resource Capital Funds 8%. This is an exploration company with drills turning that you'll definitely want to pay attention to. Osino trades in New York under the ticker OSIIF and in Toronto under the ticker OSI. To learn more, go to osinoresources.com. That's osinoresources.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Well, you have to have money. You have to have money, I think, to own it. Well, I mean, I guess theoretically you wouldn't, but I found out about real estate syndication when I actually moved down to your neck of the woods, Kerry, because I was living in Miami for a couple of years. And when I moved down there from New York, I wanted to get involved in real estate from a full-time basis, right? I wanted to figure out a way to scale what I had been doing as a hobby for 10 years. And I found out about syndication, where you can go ahead and get involved in the deal and put some money into a deal where, but not buy the whole thing, right? Like I thought, the only way to buy a apartment building, because the way that I had done it when I had bought houses, or duplexes is, I put the money down myself, or maybe I could partner with a couple of people. I didn't realize that you could join a syndication of 40, 50, 100, 200 people. Everyone puts down a smaller chunk of change and you can go ahead and own that. And then, as you're saying, I mean, I guess theoretically you could be a sponsor on the deal, be the general partner, be the guy putting the deal together and not put any money down. All the deals that I've done, 2/3 of my portfolio are deals where I'm a passive investor. Someone else is running the deal and I just invest. And then 1/3 are deals I'm a general partner on. Every time I've been a general partner, I've put down a considerable amount of money on those deals. But theoretically, I wouldn't have to.
Well, yeah, but your partners, people you want to contribute to the project, would like to know that you have some skin in the game. So it's going to make 100%. It easier. The more money you put up, the easier it's going to be to raise that money. But somebody starting out and going to have a lot of capital. They might have $25,000, $50,000. They still have their PPP money sitting in a non-interest bearing account. And for instance, one thing I tell people, it's like, you don't have to be a realtor to be in real estate. It's not necessary, but it has certain benefits because you're entitled to a commission. So if you put together a deal and you're brokering the deal, you can roll a portion of your commission into equity, right?
Sure. I don't see why you wouldn't be able to. I have a real estate license. I don't take a commission on these things when I'm doing them because, I get interested in the deal as a general partner. But yeah, you certainly could. There's nothing wrong with that, just as long as it's disclosed, right? That's the most important thing, is that you disclose that information. Everyone's entitled to fees and services for their services. So yeah, I mean, you could totally do that.
Yep. Yeah. I mean, I'm just giving an example. I'm not telling you to go out, become a realtor. I'm one too, because I found just buying and selling my own homes paid for if I live to 100, well, it paid for all of my renewals, all of my courses, everything else. Last house, 2.5, well, maybe it was 3%. It was a good amount of money.
Yeah.
And, it worked out well. All right. So top 3 suggestions you make for somebody wanting to get into this business?
Wanting to get into real estate, education would be number one. And that's the most important thing. And, that could come in the form of a classroom setting where you could go. There's, a number of places, universities that have, continuing education courses that are, based in real estate. You could do that. You could read books, like my book, little shameless plug there. But you could also, there's a lot of podcasts like this one, as an example, where you can gain financial knowledge. There's YouTube, there's a lot of different ways that you can go ahead and learn, but education, getting yourself educated, learning about what are the different options that are available to you as a real estate investor are key. So I think that's, number one would be education. Number 2 is going back to my thing that I said earlier before about relationships, building those relationships. Every deal that I've ever done, every deal, limited partner, general partner, whatever, it all comes down to a relationship, either a relationship I had with a general partner who was putting it together, or as a GP, relationships that I have with brokers, with other property owners, with property managers, right? And building that network and expanding that network has been really important. That's from the acquisition side of things. But also, as a general partner on these deals, I need other partners to come in with me. And so by building out that network and meeting other people who are investors is really important, so that I can tell them when I have a deal to see if it's something that they're interested in joining me on. So relationships are crazy.
Relationships are key. And that's a kind of a little Dale Carnegie there. But everything comes down to relationships eventually, right?
Yeah. So you've got the relationships, you've got the education, and then I guess the third one would be action. People sometimes get paralysis analysis. They look at deal after deal after deal after deal, but they don't take action. And you have to take action and get involved. I lot of people right now, as we're recording this, Kerry, it's the economy is somewhat questionable as to what's going to happen, right? We've been seeing interest rates go up. I hear a lot of people saying that we are in a recession. I have a lot of people say that a recession is coming, right? And so I have people asking me, hey, Matt, what do you think I should do? Is now a good time to get involved in real estate? And I say, listen, I think it's an old saying, right? Like the best time to invest in real estate was 10 years ago. The second best time to invest in real estate is now. Right? Like it's not the time, it's not timing the market, it's your time in the market. So you can invest in a deal and it's a good deal that is conservatively underwritten. I'm investing in deals, right? I literally wired money yesterday for another deal that I'm investing in as a passive. And I just closed on a deal as a general partner a couple of weeks ago. Like I'm still active. I'm still out there doing things. Now I got to be very cautious about the things that I get involved in. But things that are underwritten properly, things that are nice cash flowing real estate assets, that cash flow is going to allow you to ride out whatever inevitable dips that we have. And there's always dips in the market. We've had an incredible 10 years, but if you go back to 1845, the US economy has been in a recession 30% of the time. So recessions are normal. That's part of the cycle. It's abnormal that we've gone so far without having one. And this next recession that we're going to have is not necessarily going to be like 2008. There was a reason why they called it the Great Recession. I think a lot of people have this recency bias where they think, oh, well, we just had this, we look at 2008, it was catastrophic, and this one's going to be like that. Not necessarily. I mean, I don't have a crystal ball, but I do know that normally they're not that bad.
Okay. All right. Well, hey, the only thing we have to fear is fear itself, as one person once mentioned. And hey,
wasn't it like, who was that? FDR?
FDR said it, for what that's worth. But look, hey, I think you bring a lot of good points. The fear of the future is often worse than the future itself. And you have to keep that in mind. Hey, people want to find out more about you, Matt, connect with you on the web. How do you do that?
Oh, you go to my website, picheny.com. I'll spell it because it's a weird last name. It's P like in Peter, ICHENY.com. My blog's there, my newsletter, bunch of free materials. And also you can order my book there too. So check it out.
Cool. Okay. Thank you for coming on with us. Appreciate it. And if you got a question for Matt, shoot me an email, kl@kerrylutz.com. And while you're at the site, you'll see the link to Matt's site as well. And please sign up for your free newsletter. Matt, been a pleasure. Thanks for coming on.
Thanks for having me. It was fun.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.